Your realtor owes you loyalty, but the class action lawsuit against Zillow claims that the loyalty obligation was exchanged for your mortgage, risking a 144,000 hidden cost to your Bay Area home. Hello, Bay Area home buyers. I'm Steve Moon, your San Jose Metro realtor. You came to this channel because you know that the Silicon Valley real estate market is one of the most competitive, expensive, and frankly, most important markets in the country, especially if you're working in tech. And when you're making the single largest financial decision of your life, you need to know that your professional team is 100% on your side and watching your back. That's why I wanted to talk to you about a major piece of news that's been shaking up the real estate world today: the recent class action lawsuit filed against Zillow. And keep in mind that this is the seventh lawsuit filed against Zillow this year alone. So, do you see a pattern developing here? Simply put, the lawsuit alleges that Zillow has been using illegal kickback schemes to essentially steer homebuyers towards their own lender, Zillow Home Loans, or ZHL. The heart of the issue lies in Zillow's agent programs, specifically Premier Agent and Flex. The plaintiff, a first time homebuyer, claims that her agent was pressured to direct her to ZHL for her mortgage pre approval. And she says that she was never told why and simply went along. The claim is that Zillow set up a system where real estate agents who sent more clients to ZHL would be rewarded with more and better quality customer leads. Conversely, agents who didn't meet those quotas risk losing their access to leads, which for many agents is their primary source of new business. Here's a breakdown of the core allegations. Zillow allegedly gave a thing of value, valuable customer leads, to agents in exchange for referrals of mortgage business to ZHL. This is the definition of what the lawsuit claims is illegal under the federal law called RESPA, which stands for Real Estate Settlement Procedures Act. The lawsuit claims that this setup pressures agents to direct clients to Zillow Home Loans, regardless of whether ZHL actually offers the best or even the most competitive rates for the buyer themselves. If they didn't have to compete, what are the chances that they provided the best rates? Remember, some agents and their team's entire business model is based on Zillow leads. So this is literally life and death for them. The suit claims Zillow aided and abetted agents in breaching their fiduciary duty to their clients. And this is a huge legal concept. Fiduciary duty means your agent is legally and ethically bound to act solely in your best financial interest, not their own, and certainly not the interests of the big tech company. A realtor can lose his or her license if they violate their fiduciary duty to their clients. Tying better quality leads to feed ZHL created that environment to encourage that breach of fiduciary duty. The plaintiff says that she was robbed of the disinterested advice of their fiduciary real estate agent. When you're buying a home, especially in the Bay Area, your agent's uncompromised and loyalty based advice is the most valuable thing that you can get from them. You might be thinking, well, I just want a house and an agent's helping me find it. So, what's the big deal if they suggest a lender? The big deal is transparency, choice, and most importantly, your money. First, let's talk about the RESPA violation. This federal law was created to give you, the consumer, improved disclosures about closing costs and to eliminate referral fees and illegal kickbacks that can actually inflate the cost of your home purchase. RESPA says that professionals cannot be paid for just sending you business. They must be paid for actual work performed. Remember, This law was created because there was abuse in the past. Now we may be seeing a new digital version of it being used by Zillow. Second, let's look at the actual impact on your wallet in the Bay Area, where loan sizes are consistently the highest in the nation. A home loan is a massive financial commitment. Even a seemingly small difference in the interest rate can cost you a fortune over the life of that loan. So, for example, on a conservative San Jose metro area loan of let's say 1.2 million on a 1.5 million dollar home, just the difference of let's say half a percent in interest rate can cost you hundreds of dollars every single month. That half a percent difference could translate into an extra $350 to $400 a month in payments. Over 30 years, that's potentially over $144,000 just because you may have been steered away from a more competitive option in favor of Zillow's own mortgage company. And this is the entire point of shopping for a lender. When a real estate agent is incentivized with valuable leads to send you to one specific lender, your fundamental right to shop for the best deal is compromised, and often without you even ever knowing about it, because you believe your agent is legally required to have your best interest at heart and not to use you to get to a higher price client for the next round. In today's environment, whether you're a first time home buyer or a seasoned home buyer, taking charge of your own lending choice is crucial, absolutely crucial. And as your San Jose realtor, here are my top 3 tips to ensure that you receive unbiased advice. First, interview your agent and ask direct questions. Don't just ask if they're a fiduciary, but ask how they will actually serve in that role for you. Ask, do you receive any incentive, financial, lead based, or otherwise, for referring me to a specific lender, title company, or inspector? A good agent, one who puts your interest first, will be fully transparent and happy to answer. My business is built on your success, not a kickback scheme. 2, get pre approved with at least 2 or 3 different lenders. Pre approval is a critical step in the competitive market, like here in the Bay Area, but don't stop at the first one. Shop around, talk to a local bank, a major national lender, and an independent mortgage broker. Comparing their loan estimates is the only way to ensure that you're getting the best rate and possibly the lowest fees. Do this before you start making offers. It empowers you completely. 3, understand the affiliated business disclosure. If your real estate broker or agent does have a financial relationship with the lender, title company, or other service provider, federal law now requires them to give you an affiliated business arrangement disclosure. And in this day of mega companies, these arrangements are becoming more common. This document doesn't mean that the arrangement itself is illegal, but it must be disclosed to you. And it must explicitly tell you that you are not required to use that affiliated service arrangement. And if you're not seeing this disclosure, start asking questions. This Zillow lawsuit is a strong reminder that in this complex world of real estate, there are always powerful forces trying to integrate services, which can be convenient, but that convenience often comes at a cost. Your agent's role is to advocate for you, and that means helping you find the absolute best options in the market for your needs, not the easiest and the most convenient one for themselves. Thanks for watching. And if you're buying or selling in the San Jose metro area and you want a realtor who operates with transparency and who also puts your best financial interests first, let's have a talk.